why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. The probabilities are now solidified, and that's actually bullish for tech.
Because the CPI was, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5 after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
In the electrifying world of stock markets, where trends can change in the blink of an eye, there's one topic that has everyone's attention: quantum computing. It's not just the buzzword of the tech world, but a revolutionary concept that's reshaping our approach to processing power. What's truly fascinating is that while companies like IonQ, Rigetti Computing, and D-Wave Quantum are headline grabbers, intriguing movements are happening in familiar territory. Giants like Nvidia and Alphabet, often perceived through the lens of chips and advertising, are silently gearing up for a quantum leap. But how are they turning the tide in this rapidly evolving sector, and why can they become compelling investments? Let's unravel this exciting story. Welcome back to Investocracy.
Straight. What would your 3-stock lunch be comprised of? What's on the shopping list on a day like this?
Yeah, so we're really looking at things that, there's a lot of stuff in the markets with valuations rising here that have gone from 20 times earnings to 30, 40, 50 times earnings, right? That's the stuff we're trying to avoid here a little bit. For a 3-stock lunch, we're trying to find the stuff that can still grow, but that valuations really haven't stretched like that. And I'd start with Alphabet as the first one in that contender list. It's going to expect it to grow it again in the double digits for the next couple of years. And despite almost a 40% return this year, it's still only trading at about 23 times earnings. So it's right in line with the market because of all the regulatory stuff and the other overhangs that are potentials on the stock. Yeah. We see it as more of an opportunity to continue to buy a stock that's relatively cheap.
It's amazing that you can have a company come out with a quantum, the quantum companies are up 1,000% and Alphabet's trading at 23 times earnings, and they have Waymo and they have Gemini. I mean, it's so interesting how it's not a 30 or a 40 multiple kind of company.
Exactly right. And the other one that I would say is YouTube, right? If you're just looking at saying media growth, where is media growth going? Well, if you're talking about podcasts and you're talking about those things, everybody's going towards YouTube. So those are the kinds of things just in and of itself. You could make an argument with Alphabet that even if it gets broken up, the sum of the pieces might be more valuable than it's currently at right now.
Sure.
I think that's what's really interesting about this company.
22 times. Real quickly, Jeremy, about today, and then we'll move on to some of the other things we want to talk about. But do you make much of the fact that we're having kind of a reversal day where all the stuff that won this year is down? I mean, is that just year-end rebalancing? Is there something more to it?
I think it's like 4 people are trading today. I really don't think that there's a lot
and they all
to
have
take
acne.
from it, especially like you said, the pre-Christmas rally was one of the things. We're just kind of offsetting those things. I just don't think that there's a lot of activity and a lot of things you can take from these movements. These year-end movements can get a little funky, so we don't tend to put a lot of stock in it. But if a stock gets overdone based upon these year-end movements, we'll take advantage of that for sure.
Known for its CUDA software suite, Nvidia has expanded its capabilities with CUDA-Q, fostering an environment where GPUs, CPUs, and emerging QPUs collaborate seamlessly. This integration means Nvidia is positioning itself not just as a chip maker, but a key enabler of next-gen technologies. Meanwhile, Alphabet isn't sitting idle. The tech titan, synonymous with Google's prowess, made headlines when its quantum endeavors achieved a computational feat that supercomputers would take an unimaginably long time to duplicate. By unveiling its quantum chip, Willow, Alphabet demonstrated a glimpse into the future of speed and efficiency in data processing. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Here at Post 9 is Alphabet shareholder Doug Clinton of Deepwater Asset Management. Doug, good to see you.
Good to see you, Mike.
So we had this crack in the NASDAQ 100 and all the related names. And in retrospect, everyone could say, wow, they really were crowded. They really did dominate the market oxygen for a long period of time. This was an important reset. I guess, what do you do right now? Has there been a more fundamental rethink of what's behind these names or not?
We're sticking with tech. To make it clear and simple, I think the reality is this. If you look at what's happening now in the AI era and you compare it to the dot-com era, popular comparison, but I think it's apt. During that dot-com era, 94 to 2000, we had 11 corrections of 10% or more in the NASDAQ. And so as we think about this technologically driven boom that we're in right now, 5% shift really over the last 2 years, 18 months, let's call it, since AI broke out, is not that much to speak of in that context. And we still think the AI thing is just getting started. So these pieces and these corrections along the way are just part of the puzzle.
Starting to hear a little more chatter questioning just exactly how long the CapEx boom in AI is going to last. Obviously, it's well-financed. It's by the biggest companies in the world. They have tons of cash to spend. I mean, this is very solid as a source of demand. But the question is, if you start to see maybe not as quick a payoff monetization of a lot of these initiatives, do they just dial back?
We don't think they will. And I think that's going to be one of the prime topics as we think about Q2 earnings is what do all the mega cap tech companies say about their CapEx plans? That was the highlight, I think, last quarter, really.
Yeah.
They were more aggressive than people realize. And I think we're going to see that same messaging. And the reality is, if you think about AI and the mega caps, they sort of have to invest. They can't stop. We think of it as sort of this Pascalian wager, right? Believe in God, don't believe in God. If you don't believe in God, you're destined to purgatory. And if these companies don't invest in AI and their competitors get it right, they're in purgatory because they're no longer a mega cap company.
So they have to behave as if they believe it, whether they do or not. And I guess the question is, I mean, you mentioned last time CapEx plans last quarter were higher than expected, and the market rewarded them for the most part for it. Does that dynamic continue at this point?
I don't know that they'll reward these companies. I think it's to be expected, though.
Yeah.
And I think where it may play out is when we think about these hardware companies, and they've seen some of the most severe correction the last couple of weeks here. I think we may get some renewed interest in those companies because they're still the prime beneficiaries of this CapEx spend.
Where does that bring you with regard to Alphabet at this point? It has been, a little bit more the slow and steady to some degree, I guess, recently.
It has been. It's been maybe quietly one of the better performers of the Mag 7 group this year. It's still our favorite mega cap tech name, period. And I think if we think about two things, one is valuation. It trades at the cheapest multiple of the entire Mag 7 group. Right. And we also think on top of that, they trade at this cheap multiple, but they have the best story, I think, around who could really win big in AI. They've got a foundation model that's competitive with Gemini. They've got their own infrastructure, their own compute that they're building with TPUs, and they have huge distribution. I don't think any other company in the Mag 7 group can really say that other than Google.
Despite their ventures into quantum realms, both Nvidia and Alphabet retain robust fundamentals. With Nvidia trading at a forward PE of 46.6 and Alphabet at 22, they present interesting propositions, particularly given their growth trajectories beyond just quantum computing. Nvidia's deep-rooted impact on AI applications and Alphabet's ever-expanding digital ecosystem, anchored by Google Search and YouTube, underscore their enduring influence and potential in other AI arenas. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Talk stocks, specific names. Your top 5 stock ideas for January of 2025. Nvidia is at the top of the list. Stock has not traded well. Why is it going to have a great January all of a sudden?
Well, Nvidia is been mean reverting because it did have a huge move and now it's cooling. And I think its earnings season is going to just affirm, I think, visibility about how much companies are repositioning around the value creation around AI. So to me, Nvidia is the name you want to own for the next 3-5 years. And the fact that it's at 130, I think, is actually an attractive pullback.
Okay, you like Meta, you like Amazon, you like Alphabet. We don't even need to discuss. I think everybody probably knows the reasons why.
While Nvidia and Alphabet's foray into quantum computing is undoubtedly exciting, it's clear these titans offer more immediately impactful growth avenues. So, is now a strategic moment to invest in these tech leaders? Considering their blend of innovation and foundational strength, the answer might well lean towards yes. However, what are your thoughts? Share them in the comments down below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.